a minute late today. Hope you can forgive us. Good morning, everybody. Happy Tuesday. Welcome to Pre-Market Prep. A lot going on today. We have an overnight rally, which we suspect has to do with China reopening, or at least the timeline of a China reopening. We have earnings. We're at Walmart, Home Depot, actually retail wreck. That's the theme of the show really today, is I think a retail wreck. Home Depot was up. It still is up, though not as much. Also got a few 13F trades to talk about. Forgot to remind you guys on yesterday's pre-market show. I know I upset Dennis because Dennis texted me at like 4:30. He's like, "Is today 13F day?" And I was like, "Yeah, sorry, I forgot to tell you." But we have a few 13Fs to go through at some point during the show. And that's going to be our show. No guest today, so just the three of us and you. So drop us a like if you'd be so kind. And good morning. And here we go. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Yeah, I know my exposure is high on my camera. I'll try to fix it here for you in a second. Let's bring Dennis on. Let's bring Joel on. Good morning, guys. How are we doing today?
Doing well. Nice rally going here in the index futures, up 61 handles, 40.66. Caught a bit early, and that bid just stopped at about 7 o'clock. So we're a few ticks off the high. Good levels all over the place to lean on. Crude up 57 cents at 114.78. Gold getting a pop. That's up 17.50, 18.31.50. Silver futures, they're in the green too. Once I get rid of the black screen of death here, boom, and I saw Bitcoin up a little bit, and I saw Ethereum up a little bit.
Everything is up today. That's the story.
All right, I'm back.
All the futures are up today, at least.
Except
Bitcoin. For retail.
Except for retail. Bitcoin up 775.
What do we want to talk about? Retail. No.
Retail?
No.
Do we want to talk retail? Do we want to talk 13Fs? Do we want to
talk? I think we should start with retail. We are going to get a number today. Retail sales at 8:30, though. I'll be honest, I don't know how important that number really is. It is a number that is not adjusted for inflation. So it's probably going to be higher because prices are higher. So there's your retail sales preview at 8:30. Let's go to the Walmart numbers, though. We should probably just start there. To be honest, like, it really wasn't that bad. I know the stock is down a little bit here. They did lower their guidance a little bit. They lowered their Q2 EPS guidance. Originally, they said that Q2, which is the quarter we're in right now, Q2 EPS was going to be up low to mid single digits. That was their original Q2 EPS guidance. Now they're saying actually it's probably going to be either what was the exact terminology? It was I had a quote here. It was flat to down slightly. Let me make sure I got it right. It was flat to up slightly. So basically they're lowering their Q2 EPS guidance by a couple of percentage points.
I'm going to tell you got to start looking at these earnings reports differently, Mr. Israel. We're going to reteach you because we no longer look at the top line. We look at the bottom line.
I said earnings per share.
This is a bottom line. Yeah, but you started with guidance. You started with all the stuff that we have been doing for the last 5 years. For 5 years, we've never cared about the bottom line, and now we do. And all that matters is that the algos are now reprogrammed to not look at the top line, but to look at the bottom line. They see $1.30 versus $1.48, and they say sell.
Right, $1.30 versus $1.48, and okay. Again, so the EPS was light, and the EPS guidance was a little bit light. In the grand scheme of things, it's probably not that bad, but again, this is the kind of market that punishes lower, bottom line misses. So
and it hasn't been, and that's why. And it's the change of, you know, for a decade, basically, from Amazon, we haven't cared much about the bottom line. We only care about the top line, and it's completely flipped the script in 2022. It's now all about the bottom line. When you miss on the bottom line, they punish you. And it used to be the top line. Top line's okay. We'll be okay here. No, it's the bottom line we care about now. Let's show me the money. They didn't show nearly as much money as they were supposed to, and that is why your stock is down $10 here this morning. And it is dragging everything along with it in discount retail. Target down $5. Costco is trading down. You'll look at your thing and say it's only down 60 cents, but that was a bad ticket, 8 o'clock. It's actually down $4.50 here right now, so don't get too excited. TJ Maxx, Dollar General, Dollar Tree, dollar whatever. If you've got $1, probably Five Below. I didn't even look at that one, but I don't know. Five Below is actually holding up, but hasn't traded. So it doesn't look good for dollar stores, and it doesn't look good for discount retail, at least here early this morning.
Joel, you're on mute. How'd that happen? It wasn't me.
Someone's buying it. Look at this. In the last 15, over the last hour, someone is just bringing in something at 137 here. I mean, I know it's going down. We're on the lows of the pre-market session, but someone has like a 137 target here, and they are just absorbing whatever Wall Street has to throw at them. I don't see anything on the dailies to validate that bid there. But you know, if you have a big open options position, in addition, if we go any farther, I imagine they'd be buying more at 136.55 and then a bunch of lows at 135. That's what I'm looking at in Walmart.
Oh, and it's ugly. And obviously Target, maybe you should give us some levels on Target. It's the one that's getting directly hit. It's the peer. It's the pair trade. It's what people trade together. If your pairs 213 $5.5, it's going to report Wednesday night. What we did just set is a lower bar for Target, so keep that in mind. Now, expectations, if Target can even beat by 1 cent on that bottom line and show that the sales are okay, the stock will probably rally off of that report. So low bar for Target tomorrow night, but give us some levels there, Joel.
Not much in here below the pre-market low. I mean, there's just these other daily lows here that you can hang your hat on or take a look at. 206.19 and 205. I could get real interested though if they tried to fill this gap down to closer to 200, 201.18. But just straight down one bar, big move. You see your daily lows here. Just keep an eye on that. That's what's going on for Walmart. What was last month's low? I'll go there. I'll hang my hat on that one. 206.19.
Now for the good news.
Home Depot really coming through here today. This was a surprising report. EPS beat. They reported $4.09 on their earnings per share last quarter versus a $3.67 estimate. Sales also beat very nicely, but I'm not going to give you those numbers because apparently we don't care about that anymore. They are raising their fiscal year 2022 guidance, and they reported a year-over-year comps increase when the expectation was that they would report a decrease. So their comps actually increased against the consensus analyst estimate there. So a very strong quarter for Home Depot. Obviously a different kind of business, of a different kind of a retail business than Walmart. And that's clearly showing in the quarter, because if you think about what people buy at Home Depot, they're buying, things that they probably don't want, but they need. Walmart too, to some extent, but maybe it's just a case here of people are it's follow through from that, maybe that refi boom. I don't know what this. I can't explain it, but it was a great quarter for Home Depot. Is all I know.
Yeah, I'm somewhat worried going forward. I know they're raising their guidance. I'm somewhat worried, just obviously material costs. But if inflation can peak, and I guess, when you're talking, people go in and buy, for the little home projects, they're still going to buy their stuff. It's a little different than the home builders in that way. But, I mean, it's been a stock that's been really beat up. It's priced in a lot of bad stuff. I mean, the stock was $420 at the beginning of the year, and it's now $295. On a PE basis, the stock is probably as cheap as it's been in a decade. because this thing was trading. What is it trading now times earnings, Spencer? Do you have the updated number? I'll throw you under the bus. But I mean, this was probably trading 30, 35 times at one time on the peak. And now you're looking, earnings have come substantially. Stock prices come down substantially. It's probably trading pretty cheap, I think, relative. Probably 17 or 18 times if I'm just doing my air math, right?
18. You're around the money.
Yeah. So, I mean, that's a market multiple for a stock that's been, for a retail stock that's, been a very good company for a long time. So it's gotten to a point where the stock's cheap. If you're putting in a long-term portfolio, probably be okay. If we go into recession, you're probably going to end up getting it cheaper. So, but it depends on your time frame here.
You had to be listening to At the Close last night, and you would have got off one hell of a sale. Because I said if it clears 300, I said there's nothing to 310. You would have been mad at me when it went to 311. But now at 305.64 looks pretty good. So I think you got some heavy lifting to do to get back up to that pre-market high. I'd even call 308 resistance right now. Support, I have no idea. Takes out 302. Boom. You could see the top of yesterday's range, which is just under 300.
Next.
Well, in terms of the earnings, I mean, that's your headline. Those are your headlines.
What about that SE? Everybody likes that stock. Maybe not so much in 2022, but the darling of 2020 and 2021.
They like it.
Not so much the darling now. How'd they do?
Well, they like it this morning. Yeah,
how'd they do?
They're losing money, but the good news here, I guess, is
they lost less money.
They lost less money than they were expected to lose. So there's a good news. And they what is this? Oh, they widened the range. No, that's a lowering. They lowered the low end of their guidance for their e-commerce guidance for the year. So let's call that what it is. They lowered their guidance for the year.
They've been on the bottom line though. Again, the bottom line traders.
The bottom line.
It's all about the bottom line.
Bottom line beat. Bottom line beat.
Bottom line beat. Top line food.
You got to step up buyer in here. Dennis, is that you? You just got a program here and you're just like, boom, buy, step it up, buy.
I always love trading this stock. And I do trade this stock a lot. This stock is a fun stock to trade. Trades along with Kathy stocks, trades with momentum growth, but it's a fun stock to pair trade. It's got, a beta like 3 times the market. So it's a fun stock to trade. And like I said, I believe in 2020 it was my number one P&L stock. I don't know 2021. I didn't check. I should do that. But obviously the stock was just rip-roaring higher and kept going up to $372. Now it's $79. I don't know. Is there a time to buy SC on the dip? Maybe, but these stocks are still losing money.
I think this step-up buyer is going to you're going to find some major offers. If it doesn't find it before 81.90, that was your high on May 6th. 80 is such a psychological number too. I don't know what the optionality is, but 81.90. I'd keep an eye. If you're looking for a nice juicy target, you're not happy with 13.5% or $9.32, 81.90.
The only other earnings of note I would say is probably Take Two.
I was going to say that's it. Really, just Take Two from last night. I guess we could look at 10-cent Music if you want, or Jumia, but Take Two. How'd they do? Earnings last night. EPS. Oh wow, down big on a year-over-year basis. Sales up on a year-over-year basis. Guidance that they gave, well, let's call it light. EPS guidance was light because the estimate was at the high end of the range that they gave. And that's for the Q1 EPS guidance. That's the current quarter right now. Fiscal year EPS guidance, that was all right. I don't know. I know it
was all right.
Yeah, it's all right.
Good enough, because these stocks, again, I'm long Take Two. I put in the long-term portfolio 4 days ago ahead of the earnings, which took a little bit of craziness. But it's just been beat up. I mean, they've been killed. It's back down. It's given back the entire COVID gain. I think it's trading with a P of like 17 or 18. It's one of the more expensive ones, but I've always thought of Take Two as best of breed, and I just love that $100 support. So I jumped in here at the $100 support. It's working. I'm up in it now. I don't know what else to say. I had this for a long time in the portfolio. I sold most of it, and then I had kept a little piece, and I just re-added the piece that I sold. I wish I would have sold it all. I didn't sell it all. I sold half of it at 167. And then I rode the other half back down, and I bought my other half back.
Did you see Walmart? Did someone say something positive? Look at that.
I mean, the calls probably
I
happened.
mean, I
Just right $1.
No, this is when I said, man, there's a major buyer here in the lower
Stepping up.
137 handle. Was that the PMP?
You had me all excited, Joe, when he said that. I was like, did Walmart just go positive or something? Did you guys see Walmart?
$3.
It
Come
went down
on,
10 and went up
$3.
$1.
I just gave you a $3
They don't go
move
straight
there.
to zero.
Jesus, Murphy. I don't know what. Gosh, you're Dennis, why don't you just join the chat and complain and stuff? I mean, come on. I said there's a step up buyer here. All right. Take two. If this thing doesn't get to 120, it's going to roll over and you're going to say, oh, I bought it before earnings. It went up. I should have sold it.
Yeah.
And so if it doesn't get over 120, this thing's going to roll over and fill the gap at 112.04.
It's hard to say what it's going to do. I'm just stuck in the long-term portfolio because it's gotten to a point where it was where I wrote it before. It's where I had it from before. And I think it's cheap relative to where it's traded before. So, can it go lower? Sure. But it's not a company that's going to zero. It's a company that makes money. There's 3 big gamers in the world. One of them's getting taken over by Microsoft. So you're going to have Take-Two and EA, that the last 2 standalone huge game makers. Video gaming is not going away. And if you do believe in the metaverse way down the road, like 2028 or 2030, like Zuckerberg does, Take-Two will be a big part of that as well.
Yeah, I agree. That's it for the earnings here. Let's move on. You guys want to talk China or you want to talk 13Fs?
Buffett.
Okay.
Warren Buffett.
All right. So, as I said, my mistake, I forgot to remind you all yesterday morning that yesterday was the 13F deadline for the first quarter. I also, again, incorrectly sort of assumed there wouldn't really be anything of note in the Berkshire 13F because we already got the annual meeting, and we already knew, for example, that they bought Occidental, that they bought HP or HPQ. We already knew all those things, but there are a couple of new things that we learned yesterday. We learned that Berkshire Hathaway took a 2.5% stake in Citigroup, a new stake in Citigroup. Did not own that before, and on the other side, exited Wells Fargo. So we have a new Citigroup stake for Berkshire and an exited Wells Fargo. We have a new stake in. I think that was the only new stake.
No, there was 5 new stakes.
Besides the ones we already knew about, though. Wait.
Yeah, ALLY.
Oh, those are smaller ones. I don't even pay attention. All right. Yeah.
So the new stakes that I have, and maybe I'm wrong here, Paramount, PARA. I have a pair trade on full disclosure, meaning I'm long one, short the other.
Yep.
I've got McKesson, MCK as a new stake.
Oh, wow. Okay. You're way ahead of
me. I don't know if that's correct, but that's what was being preached.
Well, Paramount's up. Yeah, I do see Paramount as well. So, I see that. And what was the other one you said?
I have McKesson, MCK. I'm not sure if that's a new stake or just an added stake, but I have it written down here. MCK. You can see the pop, too, so I'm assuming that's a Buffett pop. I've also got MKL, the $1,375 stock now. That's a new stake to my knowledge. MKL, up 50 points.
You're on it.
And 221 shares.
CE, I have full disclosure. I have a small position in that. Celanese, and that's a day trading position. And then I've got, I think that's it. I think that's all. And did we miss any? So there was like 6 or 7 new stakes. Which is
and then there was the adds and deletes, right? So right. So he increased his stakes in Chevron. I believe we knew that already. He reduced his stake in Verizon. He sold some Store Capital, STOR. Exited AbbVie. Exited Bristol Myers. I think that was it.
He is busy, man. He became like a day trader on the quarter, Joel. He's looking at your levels, listening to pre-market prep.
He added more. He added more GM, added more Restoration Hardware, added more Apple, which I think we knew already. Oh, he added more Formula One. That's right. I forgot about that. He added more Formula One. Fwonk.
He's a huge fan of Formula One.
He's a huge Formula One.
He drinks his Cokes, sits back in his lazy boy, and and watches Formula One.
What about Kroger?
Yeah, he did something with Kroger.
I think he exited Kroger.
And
that's getting hit. Kroger is also getting hit, Joel, because
he didn't exit. He didn't exit. He just reduced.
He reduced Kroger. So it gets the double whammy. Yeah. It gets the Buffett. Ooh, he reduced, and it gets the Walmart.
Yeah.
which
That was
is
tired.
hitting everything.
That was a tired chart.
sure. Way
It was
tired.
tired. It was way tired. And
Exhausted.
that was Warren out there at 56, I think. That's what I think for a couple days. He was like trying, hit any bids from 55.80 to 56.20. Or he just programmed this thing. And now you got to be thinking about a gap fill in Kroger here. Take it back down to the gap up low. Ooh, you're through that 52.25. Next support I see is 49.49 in the Kroger. Don't know if we'll get there today, but that's what I'd be
I
holding
am
out
not
for.
going Krogering here. I think you've got that gap fill that Joel talks about. We
Yep.
had this ridiculous, and I mean absolutely ludicrous run from 45 to 65 in 5, or 45 to 62 in 6 trading sessions in February. This is Kroger. This is a grocery store. That was a ridiculous move. It was been ridiculously priced. Like, I like Kroger at 35 if you listen to the show like 2 years ago, but $60, way too much. It's got a gap to fill. What goes up through an area quickly can come down through an area quickly. I would be a buyer at $45. You're obviously not getting there for a while, but if it continued to leak, that's where I would strike. I think if you're striking before then, I think you're early.
What's interesting is on the earnings pop, they jammed it to 62. And then they gave you another look at it, which is pretty unbelievable back in early April. But as I said, I love the Kroger coleslaw when I make my Georgia Reubens for Michigan football and basketball games.
I like the store too.
Wait,
I don't like the stock.
Did we mention he added to his GM?
He's been in GM forever. Does he ever sell any?
I don't know.
You should have been selling when I was selling, and not buying when I was buying, because it didn't work out either.
And you mentioned Ally, right? ALLY. Did you say that? That's a new stake.
Yeah,
I think so. Yeah, and I got a position in that one too. Full disclosure.
And that's where Dana's husband works. So I'm bullish.
Bullish. All right. Yeah, they have the big building downtown. Okay. So that was it for Buffett. Yeah. I mean, there's a lot there. I incorrectly assumed, we already know about the Oxy and the Activision and the HP. So how much more could there be? But I guess a lot.
Well, what are you doing that, Mr. Arbitrageur? Did he buy? Oh, he already said he bought.
He already said. Yeah, he already said
he added more. He's an arbitrager. He thinks the deal's going through at 94. Why would I not buy it at 78?
Right.
There's some risk. That deal gets blocked. The stock is like $60, maybe $50. There's risk. So, Mr. Buffett, I don't like the risk reward on this, but I'm not going to argue with you. You've made a lot more money in your lifetime than I have. So we'll say that Buffett is innocent until proven guilty on this
one. We've gone over this before, but Buffett and Berkshire Hathaway really the only firm that has the power to move stocks on their 13F. As a reminder, with 13Fs, these are trades that are not recent. These are trades made during the first quarter. 13Fs have limitations. We, of course, know that they're old trades. B, they don't have to disclose any derivative trades on their 13Fs, so that may change. C, they don't have to disclose any shorts on their 13Fs. So these positions or these buys that we see on these filings, we don't know what they are. They could be hedges for all we know, because if you're a hedge fund, you have to disclose your new purchases, and that's pretty much it for your new common stock purchases for the quarter. So these filings do have their limitations. There's a bunch of other filings that hit last night.
Well, just with like the Warren stuff, if he bought it and it's higher and you're going with them and you're buying it, you want like that instant follow through. Because sometimes it's a fade.
Yeah.
If he sold it and you're going with them and you're selling it, then you'll want it to keep going. So just, if you're going with them, and I'm not saying to fade them or to go with them. I'm just saying I've seen these, days where I'm like, it opens up a bunch. And then I'm like, what a great short. And then everyone just piles in and keeps going higher, higher and higher. So keep an eye on the opens and all those stocks. If you're fading or going with one.
If you're a short-term day trader, you want always immediate gratification. on all of your trades. If your trade starts working against you, like as my day trading, people, we don't talk about my day trading that much on the show because it's a hard thing. Obviously I'm doing a lot of different types of strategies, very capital intensive. But for the most part, most of my day trades, I want immediate gratification. I don't give my day trades a lot of room. Usually I'm moving with momentum, maybe buying a little dip on something that's just all of a sudden grab momentum. Swing trading, got to give it a little more room. Day trading, I give it almost none. So immediate gratification is what you want when you are day trading stocks.
Just to really run through the biggest transaction that I saw in the other filings was David Tepper bought a lot of Uber last quarter, like a lot of Uber. He bought,
Really?
he bought almost 2 million shares of Uber.
Here's a stock that's been murdered.
Yeah,
$24, man. Joel, what are your thoughts on Uber? I mean, the stock, do they have a path to profitability? They must. Does Uber have a path to profitability here?
Well,
are they projecting them to make money soon?
Yeah, yes. They've said that they're going to be free cash flow positive. I think it was free cash flow positive. Is what they said. But yeah.
You know when I'll buy Uber?
No.
When they get rid of their drivers and they just have like remote cars just coming. Yeah, just coming. Like
the driverless Ubers.
Yep, driverless.
Problem is, it's going to be Tesla.
Okay, then I'll buy Tesla. Then
that's another reason to own Tesla, maybe.
Yeah. I just, it's so expensive. On a relative, I've been saying this for 100 years. It's so expensive. To me, it's just more expensive compared to cabs. So you can get it on your phone, whatever. I like to whistle to get cabs. So
yeah,
not touching it. Lyft is the same way.
Is Lyft a new all-time low?
Looking. A couple days ago on Thursday.
Man. Oh, actually, no, not true.
No, COVID.
COVID. $14.56. That's the all-time low in Lyft. They get some support down there.
Here's a great example of the limitation of 13Fs. Bill Ackman's 13F filing showed a new stake in Netflix. But if you're paying attention, you know that he sold his Netflix in April. Well, actually, we only know that because he said he tweeted it. So if you believe his Twitter, which I'm inclined to believe his Twitter, then he bought Netflix sometime in the first quarter and sold Netflix in April.
It really does. That's such a good example. And it's funny in the stock, you wonder if it was trading higher originally. I mean, the market's up, but you wonder if the algos rip. Oh my, Ackman, because the algos are so stupid. Ackman bought Netflix. Better buy that. I mean, they just read whatever. They don't probably have that all programmed in. So
yeah.
Show the chart of Netflix. I just want to see the after hours action, Joel.
Dennis, do you have something on your sell button on your keyboard or something? Because we got a steady lake going on here.
I know. It's kind of a BS rally. We talk about
the nothing rally. I know.
Well, it's the China reopening rally is what they're attributing it to, because we obviously have China stocks trading up massively, which we haven't talked yet. FXI is up 3.75%. Alibaba ripping 7% higher here this morning. JD.com, another widely followed one, up 8.5%. So it's the China rally. China's reopening. Look, China's getting past COVID. Join the rest of the world, China. Regardless, I think that's the catalyst here this morning.
The only catalyst.
I can't really. I would be a seller of this rally. I agree with you, Joel. I think it's a BS rally. I'd be more seller of this rally.
The dollar's down.
Down.
The dollar whatever. I mean, I looked at I don't know, it was 2, 3 in the morning. We're up 20. I'm like, it's a pretty nice rally. I didn't really need to look for any kind of reason. And then when I got up at 5:30 to go swimming, I'm like, whoa, holy mackerel, we really ran. And they're like, dollar down, crude up, yada yada. I'm like, okay,
people.
We're rallying on absolutely nothing.
Yeah, people always want to look at the dollar and then try to derive where equity prices are going. And I'm going to tell you, doing it backwards, because the equity prices actually predict the dollar better than the equity prices. Because when stocks are getting killed, they're buying U.S. treasuries, and that's putting pressure and putting money into the U.S. dollars. I know when I see the S&P just getting tanked, that the U.S. dollar is going to be stronger. And I know when the stocks are rallying like crazy, U.S. dollar is going to be weaker. So, I mean, it's a little bit chicken and the egg, but I think, from
Retail
my
sales,
experience of
that's what it
22
is. It's
years,
retail sales,
yeah,
Dennis.
it's-
It's
I,
the
retail
equity,
sales.
we're shopping around a bit.
For Misk.
I warned you about this, but it's not a very important number.
X
because
Auto's up 0.6%. Still on
inflation-
CNBC's content, they take ours, so might as well take theirs. Up 0.6% versus estimates of 0.4%.
It was in line. It was in line. Okay,
Yeah.
it missed by point. What did it miss by? 0.01%. So we're okay. It's fine. I mean, it is what it is. Retail
This is
sales.
fine.
Retail sales are going up because prices are going up. So people spend more because they have to. It's not. It's not indicative of consumer behavior because it's a price thing. So anyway, there's your 830 number coming and going.
Fun.
What else did I have here for us today? We went through the biggest earnings. Not really much else in 13F land that interests me. If you guys want to know more about that, we'll cover it later on in the day. But not super interesting on that front. China, like you said, all rallying. Businesses there are going to be reopening as soon as yesterday. Actually, as early as yesterday is when they can.
I thought it was June 1st.
It's a phased reopening, Joel,
Look
so
at
it's going to
this.
start over the.
Look out below. Are we going to go scratch on today, Dennis?
We could. It's possible.
I just saw an interesting stat from Bespoke. This if these pre-market results hold, this would be the second biggest opening gap down for Walmart since November 2001. So it's very rare for Walmart to have an overnight session this bad.
Yeah, it's a lower beta stock. So
Yeah.
when you lose 6% on the lower beta stock, I mean, this is significant. This is a bar that doesn't even fit on this daily chart. Like go to the 90-day, there's no move, $9 on there. You can go out to even the weeklies. There's no move on there, really $9. Maybe I had this move back in October 2021, went from 140 to 148 in a fairly quick time frame, but this is a significant move for a low beta stock.
Can we make I don't know if we can make a wager on this, but I think that you've seen the high of the day within $1, and I think you've seen the low of the day within $1 in Walmart.
I'd be with you on that bet, probably. I mean,
Okay.
I think you've seen the high of the day. You don't know.
No, I'm talking just about
this 140, this recent little bit.
Yeah,
So you think we're going to just go in here from this 137 to 140 all day?
Yeah, or
I got to call that range.
I'm giving myself a buck, because the low is 137.05, so I'd say 136.05 to 141. I don't know why I think that, but
maybe Mitch in the background wants to take you on that bet. He usually pops in when we make bets and then steals them.
No, Mitch is having internet problems all day today, so he's not even here.
Oh.
Wait, I just have a quick reminder, quick PSA. Remember last week we did the CPI contest, right? We had 13 people guess correctly.
Yes.
Those 13 people should have received an email from me. I have all your emails. The people that got 8.3%. Correct. That was the reading. I even gave it credit. Someone guessed 8.39%. I rounded down for them. So there's 13 of you. You should have all gotten emails from Benzinga at some point, either yesterday or this morning, and giving you some access to Benzinga Pro and one of our newsletters for free. Mitch is here. He's in the chat.
I just got an informative tweet from Zach Brown. I hope it's the Zach Brown. It's the country music singer.
It might be.
And he said, Uber has already started this. It's rival IONIQ 5. Nonetheless, Tesla will never get this far without proper sensors and open sourcing their FSD data to regulators, which will never happen.
Talking about robo-taxis, and I would never, ever bet against Elon Musk.
Okay, I'm just telling you what the Zach Brown band said.
I mean,
this guy, the stuff he does, with SpaceX is nothing short of incredible. And I watched the documentary as well, Mr. Israel, and it just makes you respect Elon Musk that much more.
Yeah, I mean, like it was a giant commercial, right? So you gotta know that going in. But it was an effective commercial. I'll say that it was a very effective commercial. Do you want to talk? Do you want to give thoughts on Twitter today, Dennis? Because Joe and I gave ours yesterday. And I don't know what else to say about it.
He's gonna bail. He's gonna end up paying the $1 billion. He's gonna bail, and Twitter's gonna be a standalone company. The risk arbs are saying that. the risk arbs are saying this deal is, if it's getting done, it's getting done at a hell of a lot lower price, but I don't even think it's getting done. So now you got to look and say, well, where is Snap? Where is Pinterest? Where is Facebook? Facebook's held up because they have the decent earnings report, and they've bounced back a bit. So you kind of think, where is Twitter without Elon Musk? It's probably about $30. So, you know what? At 36, I mean, if you think there's a chance that the deal gets done at 54, the risk arb should be buying it. So I don't know if I'd be a seller at 36 with the potential that there could be some type of deal on the table. But I think we need to stop thinking about 54. It was a screaming short up there, Joel, with a fabulous sale at 51 when he sold it. I mean, now it's 36, so it sets up not bad from a risk arbitrage perspective, but if there's no deal, it's probably under 30. So there is still some risk here, because some people look, oh, well, it's lower than it was before Musk announced the deal, but stocks have come lower. So if there's no deal, if Musk just pays $1 billion out, it's probably fallen like $28. So you got like $8 downside. If for some reason they get the deal down to 54, you have 18 points upside, which isn't bad. I think there's almost zero chance this deal's getting done at 54.
I mentioned this the other day. I believe I mentioned on this show, maybe in a different show, that Matt Levine is my favorite financial writer. He's a columnist at Bloomberg.
Awesome.
And one of the reasons he's my favorite is because he does these hypothetical dialogues where he writes out how he would do things if he was in certain positions. So he wrote out a dialogue yesterday where, like, if he was Twitter, here's how his negotiation with Elon Musk would go. Musk, I don't want to pay $54.20 per share anymore. Let's do 42. Me, the chairman of Twitter's board in this hypothetical. No, you signed a contract. Pay us our money. Musk, I'm going to ignore the contract and say some nonsense pretext about bot accounts, and my fans will believe me and somehow think I'm the victim here. If you sue me, I'll wage a scorched earth fight and drag it out for years. As the company implodes, I will blow up my financing, so I might be able to avoid closing and end up paying you the $1 billion termination fee, which is like $1.30 per share, basically nothing. Your shareholders will be much happier with 42 than with that catastrophic outcome. Me, you're not going to do that. Musk, oh yeah? Why not? Me, because we run Twitter, and if you walk, we're going to kick you off Twitter permanently. This will make it harder for you to connect with your fans and sell Teslas and keep up your company's stock price. Losing access to Twitter will cost you more than the $46 billion you agreed to pay for it. And on it goes. So anyway,
he's awesome. Levine, I read that stuff. It's amazing.
Yeah,
absolutely
hilarious.
Amazing.
I
got to go read that right after we get done our show, or after I get done with the open.
I mean, we've been talking about the Twitter bots for years, or I have.
You're obsessed with Twitter bots. You think I'm a Twitter bot.
No, I think you get aggravated by Twitter bots, and they're just, and you should just ignore them.
They argue really well.
They did. Oh, I tell you, there's some new ones out there that I think are like programmed to get under my skin. That's all they are. I don't follow them. Somehow they sneak into my feed, and I don't know how. I got to figure out how to just get rid of them. But I think I did. Spencer, I may have you help me with that later.
Okay.
Special guest in the chat, too, Jason Raznick.
Hey, Raz Alert. What's up, Raz? In the meantime, we just had some guidance from Caterpillar. Guidance and a buyback. Guidance and a buyback from Cat. So they just announced a $15 billion buyback, and they reaffirmed all their prior guidance numbers, essentially. So Cat should be up on that.
You're buying the stock
the very
right now.
next day. Yep. Isn't that a song?
What do we got? We just got a little pop, 74, so they haven't bought all the stock yet. Up on 7,000 shares. No man's land here. One daily high, 212. Maybe you get some room. You get some people reading this headline a little bit after we do, and they take it up to 217.01. But I think I'd be a little bit surprised if it got that high today.
Deer, Caterpillar, put those two charts on top of each other. You pairs traders out there, they just work so well. I mean, when the VIX goes up, and this is one thing to understand too, is relationships even get stronger. So in relationships to everything gets stronger. You put those two charts, Deer and Caterpillar, on top of each other over the course of the last month and a half. They are virtually identical. So keep that in mind if you're trading Deer as well.
Wait, hold on, Triple D. I know you like when you say I can't do this, but here we go.
You can do it? You're going to put them on top of each other? Prove me wrong. It kind of looks weird because...
Wait, hold on.
I'd like to get them on top of each other.
Wait,
but yeah,
Raz said Elon was doing did a podcast or something yesterday, and Raz said he listened to like an hour of it and said he doesn't think Elon will go through with the deal unless he gets a 30% discount.
I think you're right, Raz. I don't think there's any way in any shape or form he's paying $54.20. He's probably going to go down to like $34.20.
Never intended to.
Yeah. Well, he intended to, and then he had buyer's remorse pretty much immediately, and now he's trying to figure out how the heck to get out of the deal. He had buyer's remorse as soon as they slammed Tesla on it. And props to you, Joel, for calling that. I mean, the next day they hit Tesla.
Oh yeah, it's like
he's like,
yeah.
Well, I didn't think they're going to hit my Tesla stock on this. I'm using it as leverage, but why would they hit that? And anyway, so I think he had remorse immediately then. So love Elon Musk. He's a powerful figure. If he wants out, he will find a way out.
I wish he'd spend time attacking social issues and real social issues, not Twitter.
Whoever just asked for the link to that Matt Levine thing, I just dropped in the chat. Jeff, I just dropped the link in there.
I don't know if I follow him. I'll have to see.
Yeah, I think he's just really funny, and like the way he writes about like super like inane Wall Street like stuff he's very glib, and it's
let's get him on the show.
What do you call him? I've been meaning to reach out to him actually.
Reach out to him.
Who's he work for?
Bloomberg.
I've heard it. Oh, he might not.
He probably won't come.
We'll see. All right.
You did get this one Bloomberg
competing
guy
network.
On. Oh, we've had what's his handle?
Matt Levine.
Is it at Matt_Levine?
Yeah.
Okay, I think he's gonna be my 76th follow all time. All right, Matt, you're on the board.
I've followed Matt for years. Love you, Matt.
It's great. All right. Well, I'll tell him that when I reach out. What else did we have here? Again, as I mentioned, no guest today, so we're just gonna hang out. I think that was essentially the extent of my list. Looking ahead to tonight, not much in the way of earnings. We do have Doximity, so growth stock. So, unless they say that making money all of a sudden, then it's probably not going higher.
Tomorrow night's interesting though.
Tomorrow morning is interesting. Tomorrow morning is Target, Lowe's, TJX.
Yeah.
And tomorrow night is Cisco. So tomorrow is kind of the big day of the week.
So we have all kinds of moving of bars for 3 of those earnings report. The Target bar has all of a sudden moved much lower because of the disappointment with Walmart. The Lowe's bar moved higher because of the disappointment or because of the good report with Home Depot. And the TJX bar has moved lower because of Walmart. So keep that in mind. TJX or Target just say anything okay, just even come in line on the bottom line, and the stocks could rally on that. Lowe's is going to have to blow it away now. With the Home Depot report, and Home Depot still trading up $11 here this morning, Lowe's is going to have to blow it away to go higher. It's all about bars.
With you. Yeah.
That's it. Thursday's Applied Materials, Palo Alto, Kohl's Friday, Deere. We have time with Deere.
What's going on with Kohl's? I mean, I'm still waiting for...
They rejected. Kohl's rejected the everything.
Why?
They rejected every deal that they've had.
Why?
I don't know.
That's crazy. Look at that.
That's a nice calendar. Benzinga does a nice job with the calendar.
Shut up.
Everything that God. Oh, poor Kohl's.
The Kohl's just have news.
Just now?
Yeah.
Just
tanked.
Oh yeah, that's interesting. I see that too.
Look at that. Holy mackerel!
I don't know. Let me go hunting.
I don't see any.
I don't see anything.
I don't know.
They're redoing that store at Orchard Lake and 14 Mile. I had to return something there for Lisa.
Matt Miller says Kohl's board doesn't want to be out of a job. Yeah, that's probably part of it, Matt. Yeah, I mean, it seems like it's a good offer. So they're all good offers. I don't know. We don't know what's going on there. We don't know what's going on with Spirit Airlines.
What about the Fed heads? What Fed heads we got?
All right, we got Jerome Powell today, 2 p.m.
Actually, Macy's just tanked, dude. Was it Macy's?
It could be.
Macy's went to 15.
Look what just happened.
What's
was
going
that a bad
on?
algo? Nordstrom, Kohl's, Macy's all just puked big time.
$15.
Macy's hit $15.
Yes.
Somebody just had a fat finger pre-market. Holy mackerel. I was just saying, what just happened there? What else? Was there other stocks that just did that?
I'm
chat. I'm just like, That was a fat finger in Macy's. That was a
Yeah.
fat finger in Kohl's, I think, and that was a fat finger.
Nordstrom, but not to that extent. So yeah, wow.
Macy's hit $15 just down the pre-market.
Yeah.
You got to remember, outside 20%, they can bust those trades. So if you bought that, I
Be
believe.
careful.
No.
Yeah.
Chaz, retail sales was out 15 minutes ago. That
Yeah.
ain't
That was a
No,
fat finger. You just saw that live with it. Wasn't so Macy's, and then obviously if Paris traders will probably hit Kohl's and Nordstrom off it. They see Macy's at $15, and the algos automatically hit Kohl's and Nordstrom, so probably triggered sell-offs in Kohl's and Nordstrom's as well. But that Macy's was a fat finger there. I got to go look at the tape on that one.
a lot of volume.
Traded. Must have been
Dennis.
a lot of volume there, Joel.
Yeah.
Nicole says she just had 6 alerts go off at once.
That was crazy. That's the craziest fat finger I've seen in a stock as big as Macy's in a long time. I don't see a headline here, so I'm assuming it was a fat finger. Obviously, somebody's got sellers and big fun. So I'm looking here. It happened at 8:44:07. Somebody just came in and just hit every bid. It's all the same
50,000 shares.
It was an oops trade for sure. All the way down. How many shares, Joel?
Here, I'll bring it up.
Oh my
Right here.
gosh.
On the uptick, 8,700. On the downtick, 45,000.
45,000 shares. Somebody just threw away a pile of money on a fat finger. $15. Not a lot of trades at $15. 1,000 shares at 15. I see another 182. I'm just looking at the tape. But lots of 18, 17, 16, all the way down, and then immediately back higher. So, it was the next tick after that was 18.29 and 19, and then back into the 20 handle. Somebody went, oops.
Wait, so can you explain the fat finger and why that happens?
Somebody puts in an order too big, and they may be meant to put like 50,000 shares, sell at 20 or sell at, when they hit maybe they hit $10 or $15. It's instantaneous execution, so it just sweeps out everything in the book.
You know what they probably did?
Somebody probably just sold 50,000 shares.
Yeah, exactly. You know what?
And they put the wrong price or something on it, and it goes boom. And there's no market orders in the pre-market. I don't think any retail brokers take market orders. Like, I've never heard of that. If they are, it's a problem. But you still put a limit price, but they probably just put the wrong price.
They probably meant to put 50,000 at like 2015. Now, who would put it?
It could be. We'll never know.
Yeah,
unless somebody fesses up. We'll
Anybody
never
putting
know.
a 50K limit order, they had their head examined. I mean,
that's
I don't know.
Crazy though.
But they put 15 in there, whatever the price was. That's what they put in there.
That's ugly. You won't find that on CNBC. They won't even know that happened. But this is that's crazy. That's a crazy sell-off. So, anyways, I have no position, Macy. Wow. Wish you had some bid sitting down there. Now, remember what I said. So, 20% on $20 stock.
15%. I thought you said.
I think it's 20. We got to look at clearly erroneous rules. They've adjusted these over the years. So I think
$4.
Yeah. So the 15 could get busted. So the 18 will be good for sure. Just remember that. That can happen. They can bust trades if they get out of more than 20%. Clearly erroneous. It's different for different stocks too. I'm just, you can Google it. That's actually what I'm doing just to get the actual amount. Clearly erroneous execution. It was cool. It happened live because we just happened to be looking at Kohl's.
Yep.
It was weird. It was like a weird coincidence. We just happened to be looking at Kohl's. Okay, so after our session, if the stock is between $0 and $25, if the transaction is more than 20% from the last 20%, those transactions can get busted. So we can take 20% times wherever it was, like $20, say the close, $20.92.
That's what I did.
Anything below 20% lower can get busted. So if you do the fancy calculator, get Joel's air math out, 20.92 times 0.2, we'll get it for you exactly. So that's about $4.18. So take 20.92 minus $4.18 to 0.92 minus, we're teaching you grade 2 math here on the show, 0.18, $16.74. So anything executed below 1674-ish, that's a ballpark because I don't know where it was before, but say that's a ballpark, could get busted if that institution, whoever did that, calls. Anything above that is probably not going to get busted because there's clear rules for this. It used to go down years ago to ruling on the floor, but now they've set guidelines, and they don't stray from those guidelines very often. So 20% down, some of those 15s and 16s are below that, so those could get busted. So if you just bought it at 15, don't get too excited. If you bought it at 17, I think you're good.
And so it looks like what happened was whoever did this, they cleared out every single order from like whatever 20 whatever it was 2090 20 whatever it was all the way down to 15.
Yeah.
Like they just chewed through.
There's not much in the book this early, Spencer, on a stock like Macy's. There'll be stuff close to the price, but once you start getting away, there's just nothing in there. 8:50 in the morning, the book hasn't filled up. There's books that are empty. Like there'll be some small stocks that have no bids. There's no bid on the stock. So you want to try to get out, you can get out at the no bid. You can offer down, and if somebody will take you, you got to wait. That's why pre-market is very dangerous. Don't just send orders with any prices. Know your prices. You've got to have, obviously they take limits, but somebody had a fat finger on this one.
Very interesting to see that play out in real time. All right, 8:51 here. We got about 9 minutes left in the show. That was fun. Let's do some ticker time. If you have any questions for us, drop them in the chat. If not, we'll just
who needs guests when you got fat fingers out there, right?
Someone did ask for GLBE, which what reported last night. Globe, what is it? Globe E Online. We can pull that one up. GLBE is the ticker. Lost money, lost 35 cents a share last quarter. Very, very small company. Sales guidance they gave was light. EPS, that was for the quarter. Fiscal year sales guidance they gave was okay. I don't know. What's the stock doing today?
What do they sell globes online?
I don't actually know what this.
I don't know anything about this.
I mean, when you look at a stock and you see the name Global E Online Limited Ordinary, isn't that just a reason not to buy the stock? I mean, seriously.
Judge a book by its name.
What the heck do they do? Global E Online Limited Ordinary.
E-commerce company is all I know.
E-commerce. All I could say is if you're long, I don't know what to tell you, but if you want to get long, someone likes this thing between 13.50 and 14. Just a real patient buyer. They're like, I'm not paying 14.30 or 14.50 or whatever. So they're there. We're trying to bring it in. I don't know if it's a short or some kind of. I doubt if there's any options on this, but that's all I can give you. All-time low by a large margin.
Good question. I just going back to the Macy's fat finger because it looks like we're educating this stuff. Ivan in the chat's asking, well, we see stocks trade 20, up 30, 40% all the time in the pre-market. Why don't those trades get busted? It's when it's like basically on no news and it's a sudden move like that. So if you have a news event, then, that's not going to, obviously if the news is driving it. But when there's no news and somebody just screwed up, like that's literally somebody screwed up. If they call, nothing gets busted. If nobody calls, that institution doesn't call, whoever did that, they're not going to bust anything, but they call and then they say, look, I screwed up. I put the wrong handle on the thing. And that's probably what happened. We're just guessing. We'll never know for sure because probably nobody's going to fess up to it, like I said. But somebody will call the broker and say, I screwed up big time here. I put the wrong price. I just sold Macy's down to 15. What can you do for me? Broker will call the floor. They take it to ruling. That's when they'll look at the 20% rule and say, okay, yeah, this is obviously not news. This was not impacted. This was just, the one time your screw up order, 50,000 shares to sell at 15, and it went all the way down and came right back up. Well, we have 20% is the rule, so nothing's going to get busted there, but anything under that 1674 gets busted. So stocks are clearly allowed.
Just to go into a little bit and why this is dangerous is because if you bought the stock at 1550, thinking that you had good stock and you're like, hey, I'm going to flip this out at 1750 or 18. Now you're actually short at that price because you don't have the buy. Yeah. So that's the perils.
During the flash crash of May 6, 2010, I can remember I bought a couple stocks that were way low and I was like, I'm like, they're probably going to take those away. So I just didn't execute out. And I don't know. And there was other traders too. During that, obviously, if you bought anything at a penny, I mean, during the flash crash of May 6, 2010, we had 360 stocks trade down to 1 cent a share. Those were the stub quotes. Those were obviously getting busted, but there was stuff in the middle, and they didn't have clearly erroneous rules back then. So we didn't know how it was going to happen. They actually put the clearly erroneous rules back in after the flash crash because they're like, okay, well, when these algos or when something bad happens, somebody has a fat finger, we need guidelines, because otherwise it's just so subjective. I'm like, what are we busting? And in the case of the flash crash, I believe it was like 60% down. So you bought the stock like 61% down, your buy was no good. You bought like 59% down, your buy was good. And I'm just going from my memory, so I'm not 100% on those numbers, but my memory is usually pretty good on this stuff. So it's interesting. I mean, this is pre-market after hours trading. This can happen during the regular session too. The bands are actually tighter in the regular session, but you don't see it as much because the books are so much thicker. There's a lot more orders to buy. There's a lot more offers to sell during the regular session. So you don't see, it just blow through all the liquidity like that, like we just saw in Macy's very easily. There would be a bazillion more shares. It would easily absorb, if we on the regular session, 50,000 shares would be absorbed in Macy's, probably within 20 cents. But because it's 8:44 in the morning, there's just no orders on the book, and it can't absorb that much sudden demand, sudden supply, which obviously is what it sees. So it can't absorb that order.
If you're ever in this position, this is what you do. You call your broker and you say, "Oh, it's too quiet. I screwed that up. Sorry. Let's try it again."
Oh, it's going to be a good joke, too.
Erroneous on both counts. Oh, Lord.
That's what you do. That's what you do.
What's that from?
I know. That's Vince Vaughn. Or that's
Yes, that's from Wedding Crashers.
From where, though?
Yes.
From what? Wedding Crashers?
Wedding Crashers. That's what you do.
Crashers.
Call your broker and just yell, "Erroneous!
Erroneous!
Good one,
Erroneous on
Spencer.
all counts! Bust it all!" They're going to say 20% down, you're screwed, but
Yeah.
fun. It's not fun for somebody this morning, though. Ouch.
Alrighty.
Ouch.
What else do we have here? Sorry, scrolling up from the chat. We can look at.
Yeah, if you call Robinhood, they probably don't. They probably don't.
God, can you get through to Robinhood? They'll be like, "What
Can
are you
get
talking
through to
about?"
Robinhood? It's like, I'm on Robinhood here.
It's
I
probably
just
a
sold
Robinhood
Macy's down to
trader.
$15. There's actually, most of your brokerages have, like, if I was to do that at IB, they have, like, this is outside the range. They have, like, a check for it, so which is really important. Some of these, obviously, maybe, you can deny the check. But, I mean, if I'm sending something and I put the wrong handle, let's say I meant to put, 100, or let's say it's a $100 stock and I accidentally put 10. I missed a 0. Well, it would check and say, this is more than 3% away from the current market price. Do you want to continue? So those checks are very important. So you retail brokerages out there, I don't know if Robinhood and all those have checks. They should. I hope they do. I know at Interactive Brokers, there's the check, and it helps to save you because, keystrokes errors happen. I mean, you're selling a $100 stock, you put 10 and you forget a 0. I'm not selling 10. That happens. That's how this stuff happens, folks. So anybody else, hey, it's a good thing for the chat. Does anybody, Fidelity, Red Rum says Fidelity has a check. Does, like if when you're throwing it away from the price, does anybody else know if their brokerages have that? I know from personal experience, IB definitely has it. I know that Ready has it. I mean, from where I trade at Bright Trading. So on my trading software, both have checks, which helps. But just curious, Webull does. Thomas says Webull does.
Good.
So hopefully most of them do. TD does. Hopefully most of them do. They should. But I don't trade all these brokers, so I don't know this.
All right, real fast, we'll do a couple more. AMD catching an upgrade this morning from Piper Sandler to overweight. Let's look at that one real fast.
AMD, nice move up here. 98.38 as your pre-market high, and you've kind of faded off that. I mean, I can't get $100 out of my mind on this thing. I mean, it had the earnings, and everyone was chasing it. It got close to 100. It reversed. I mean, there's room up to 100 in this thing, but until it proves that 100 is the floor again, I still think, the path of least resistance is lower. You don't have that many monthly lows in an area not to have it act as similar resistance on the upside. So the high, there's actually, after the earnings day high, you had a pair of highs at 98.
All right, that's it. It is 9
already
on the East
9
Coast.
o'clock on a Tuesday.
Time flies when you're having fun.
It was a fun show.
Fun show. We will be back with the guest tomorrow.
We don't need no stinking guests. They
as
talk too much.
As a reminder, like a lot of Fed speak. Okay, Powell speaking today at 2 p.m. It's not like an official Fed event, but he's speaking at like a Wall Street Journal thing, so couldn't move the market. Watch out for that. Other than that, that's kind of the big macro thing of the day I have to warn you all about. So we're done here. Reminder, if you haven't, go check out benzinga.com/premarket. You can watch this show on that page. There's a whole lot more there as well. Smash that like button. Please remember all the information from our show and all of our shows, in fact, meant to be used as informational purposes and not for investing or trading advice.
Please consult your own financial advisor before making any investment or trading decisions. All right,
and use don't sell Macy's down to $15.
Don't sell Macy's down to 15 when
we
it's
give
20.
Such good advice. Don't sell Macy's down to $15
when it's at 20.
Yeah.
All right, everyone. Going to send you over to live trading with Mitch, Ryan, and Zuni. Have a great rest of your day. I'll catch you on Benzinga Live.
I'm going to tweet out the tape here right now, just so you can see it.
That should be fun.